I just watched an incredible video about a man who controls the technology behind 157 prop firms. And in it, he exposes the brutal truth about why traders fail. And more importantly, he reveals what separates the 2% that pass from the 98% that fail. I just watched this incredible interview with Justin Hertzberg, the CEO of FPFX Tech, the company that literally powers over 150 prop firms. This guy has the data from hundreds of thousands of traders, and what is revealed in this video will absolutely shock you. Now, I've watched the interview and I've condensed this into an under 15-minute video, so this is a condensed version of everything that happens in that interview. But if you are interested in watching that interview, I will leave the link in the description. By the end of this video, you'll know the exact red flags that could save you thousands, the exact behaviors of the profitable traders, and why most prop firms are actually broke. First, let me blow your mind with some of the statistics Justin revealed in this video. He got this information by surveying over 3,000 traders from 10 different prop firms.
We surveyed, I think, 10 of our prop firms that had around 300,000 active accounts between them. The data indicated that 14% of the traders passed the challenge and got to the funded stage. 7% of traders received a payout, and the average payout was 4% of the account value.
Only 14% of all traders actually pass the challenge stage and get to the funded stage. That means 86% fail out the gate. But here's where it gets worse. Of that 14% of traders that get funded, only 7% will actually receive a payout. And the average payout is only 4% of the account value. So let me break down the math for you here. If a prop firm sells 100 challenges at $500 a pop, that'll bring them in $50,000 of revenue. But only 7 traders will ever get paid from that. And they'll get an average of $4,000 each. That's $28,000 in payout from that $50,000 revenue. But wait, there's more. Justin also revealed that the average trader will only last 22 days. So that means most funded traders will lose their account within a month. And here's the most shocking part. 90% of all prop firms are technically insolvent.
People get in their head that they want to start a prop firm. They're looking at the landscape, they're seeing all these other firms do it. They think it's green pastures, they think it's a great business, but they don't really know what's actually happening behind the curtain at these firms. And if you looked at a lot of these firms that have come up, let's say in the last 6 months, I would venture to say probably 90% of them are technically insolvent.
This means they don't have enough money to cover the payouts they owe. They are essentially using new sales to pay out old liabilities. Now, before you think this is all doom and gloom, understanding these numbers is actually your advantage. Because while 93% of traders are failing, the 7% who are not understand something the others don't. Justin gave a masterclass in spotting prop firms that are about to collapse. And here are the red flags you need to be watching out for.
The clear red flags are when the firm says, oh, we have to halt payouts for a moment, or we're having an issue with our brokers or our liquidity. Those are the telltale signs that something is wrong. Because the reality is those are not the types of things that cripple a prop firm. And so when you see that, that's a major concern that this firm is now scrambling to figure out how to get enough capital to meet its obligations, to maintain its reputation in the community. And that's also where you'll start to see promotional ads that are just nonsensical.
Number 1 is a prop firm that halts their payouts, claiming that they are having issues with their broker. The truth is legitimate prop firms will not have these problems. Number 2 is nonsensical promotional ads. If you see buy one get one free or 75% off, these are cash grabs from money-starved firms. Number 3 is new firms without proper capitalization. He recommends that firms should have between $150,000 and $300,000 in reserve capital to start. Most new firms are basically starting with nothing.
But we typically tell firms that a healthy place to be is somewhere between $150,000 and $300,000 of cash available at the time of launch. So that's after you've built your website and prepared some of your marketing materials and you've paid us as your technology provider. You don't have to put that money anywhere. It could be in your pocket, but you just need to have it. It's your net capital. It's your reserve.
Number 4 is manipulated payout data. You know those blockchain trackers showing you millions in payouts? Well, Justin revealed that these prop firms can easily manipulate this data by cycling money through multiple wallets. Some of those $8 million payouts in a month are complete nonsense.
I have raised to Rise personally that I think a lot of that data is manipulated, because what is being tracked is money out of the wallets that have been identified as belonging to a particular prop firm, and they're basically saying all the money that's being sent from that wallet out is most likely payouts to profitable traders, and they're using that as a truthful indicator of how much is actually being paid out. Common sense would dictate that some of the payout numbers that appear through those websites that are tracking it, they just strain credulity. I can't see them legitimately being the case, because I don't believe any of the firms are doing anywhere near that in revenue to be able to support payouts that size.
Now, if you want to see a video about more red flags, make sure you check out my previous video where I specifically went over 7 red flags that you should be watching out for. He said the largest prop firms are probably doing $10 to $20 million in monthly sales. So how can they be paying out $8 million? The math just doesn't work. And here's the big one. If a prop firm disappeared after the MetaQuote situation, that should tell you everything. Legitimate firms would have adapted, and the weak firms are the ones that collapsed overnight.
I think it did expose a lot of firms for having a single point of failure, in that they were solely reliant on one trading platform through one brokerage relationship, and if that went away, their business is crippled. We were fortunate enough to have the foresight going back over a year to actually start integrating with other platforms other than MT4 and MT5. So when that happened, we'd already been integrated with DXTrade, MatchTrader, and CTrader, but it had a major impact on future sales.
So now let's have a look at what actually makes traders successful. Justin has seen the data of hundreds of thousands of traders and knows exactly what separates the winners from the losers. Most successful prop firm traders are actually swing traders, not scalpers. They'll hold positions for days rather than minutes. Why? Because short-term trades will be chopped up with spreads and commission. They don't over-leverage their accounts. While everyone else is going for maximum position sizes, winners are using conservative sizing. Here's the key insight. The biggest payouts come from traders who are swinging for the fences and just got lucky. But the consistently profitable traders, they make 2 to 5% per month, month after month. He said something in this video that really stuck with me, and I quote,
"What indicates typically a consistently profitable prop trader is the same thing that indicates a consistently profitable self-funded trader."
The losers over-leverage, over-trade, chase 50% monthly returns, and treat their accounts like gamblers, whereas the winners are patient, disciplined, and they treat their funded account as if it is their own money. And here's something most people don't realize. The traders who last longer than 22 days all have one thing in common. They have proper risk management and they stick to it. Think about it this way. If you can consistently make 3% per month on a $100,000 account, that's $3,000 per month. Now, if you were to scale to $1 million, you'll be looking at making $30,000 per month. Now, this is life-changing money, but it requires patience and discipline. Now, in this video, he also talked about the future of prop firms, so let's dive into that. He gave some incredible insights into where he thinks the industry is heading, and it's going to separate the winners from the losers even more. First, he said more regulation is coming, and he said he welcomes it because it will eliminate the bad actors.
We are now at the place where we're encouraging prop firms to say to that client, "We appreciate your business, but you're no longer going to be able to purchase challenges through us. We wish you the best of luck in your trading endeavors," and really try to focus on more of those high integrity traders that are really trying. They're trading the way they would trade their own money.
He expects more requirements around net capital, transparency in risk management, and compliance checks on promotional material. The firms that survive will be the ones with proper capitalization, transparent operations, and legitimate business models. The fly-by-night operators will disappear. The second thing he talked about is that technology is changing. His company is actually developing a lot of the AI technology that can identify toxic traders and help firms hedge their exposure more effectively. This means firms will get better at spotting gamblers and reward the real traders.
I come from the regulated space, so we actually built the technology to support regulation and best practices as we see it to apply in this space. We capture really every bit of data in terms of the trading activity of a customer, every account they've ever had, every trade that they've ever placed, and it's stored forever in our CRM. And so if we ever needed to make regular reporting to a regulator, we're happy to do that. We'll figure out how to communicate and send that messaging and do so.
And third, he spoke about how traditional brokers are entering the space. Companies like IC Markets and Oanda have entered the prop firm space. These firms have decades of experience, proper regulations, and very deep pockets. And I don't think they are going anywhere, which is a good thing. Now, what does this mean for you? The industry industry is maturing. The easy money period is over. But for serious traders who understand risk management, the opportunities are actually getting a lot better because the competition is getting weaker.
I think the industry will continue to grow. I think that awareness will leech money away from the brokers from self-funded accounts. Interestingly, though, the brokers that get into the space tend to be very pragmatic about it. They don't come in and throw a lot of money at it right away. They tend to be big ships that turn slowly. They're gaining in the space relative to a lot of standalone prop firms right now, not because they can throw a lot of money at it, but because they have the credibility. They have the longevity of being around for a couple of decades.
All right, so let's get practical. Based on everything that was revealed in this video, here's exactly what you need to do. Before joining any prop firm, research the principals. Who are they? What were they doing 6 months ago? Do they have experience in finance, or are they just influencers looking for a quick buck? Ask about capitalization. A legitimate firm should be very transparent and give you information about their reserves. If they can't or won't, just walk away. Look for boring, established firms rather than the flashy ones. The firms with the best long-term prospects might not have the sexiest marketing, but they will be here next year. For your actual trading approach, think like a business owner and not a gambler. Risk 1 to 2% per trade. Focus a little bit more on holding trades longer or getting into more swing trades, and aim for a 2 to 5% gain per month. And here's the most important point. Treat every funded account like it's your own money, because the moment you start thinking it's not my money and I can take much bigger risks is the moment you fall into the 93% of failures. Justin said something very profound in the video. This is a risk management game, not a sales and marketing game. The firms that understand this will survive, and the traders who understand this will profit. This is exactly why we've developed our incredible trading system. We understand the industry realities, we know the statistics, and we've built a system that works within these constraints. Look, the prop firm industry isn't going anywhere, but it is evolving. The Wild West days are ending, and that's actually good news for our serious traders. The key insights from this entire interview: success in prop trading isn't about finding the perfect firm or the best secret strategy. It's about understanding the game you're playing and playing it better than anyone else. If you want to see exactly how we've systemized this approach, how we've taken insights and data and turned them into a repeatable process that's getting traders funded and paid, then make sure you go and check out our demo at www.propfarming.com. The link is also in the description, so make sure you check that out. Now, if this video has opened your eyes to the reality of prop firm trading, then smash that like button. If you haven't already, make sure you subscribe to this channel for more videos like this. Remember, in a game where 93% of people lose, being the 7% that win isn't about luck. It's about understanding what you've just learned, understanding the data.